Did you know that nearly 1 in 3 millennials have less than $1,000 saved for retirement? That's terrifying when you really think about it. You guys are in your 20s, which means you have decades left to grow your money, but so many people are starting off on the wrong foot. But here's the good news. It doesn't matter if you have student loans, you're living paycheck to paycheck, or if you're just starting out. Building wealth is still 100% possible, even if you're starting with absolutely nothing. Trust me, I've been there. In this video, I'm going to share with you exactly how to avoid the mistakes I made when I was in my 20s, and I'm going to break down a clear, actionable blueprint that you can follow to start building wealth right now. This is the stuff they should teach in school. But since they don't, I'm going to. One of the biggest mistakes I see young people make is thinking that they need a ton of money to start investing. They often believe that without a substantial amount of cash, investing is out of reach. Let me tell you, that is completely false. You don't need to be wealthy to begin your investment journey. The truth is, the best time to start investing was yesterday, and the second best time is right now. Time is your greatest ally when it comes to growing your wealth. Even if you can only afford to invest $50 a month right now, that's $50 more than you had yesterday. Every little bit counts and adds up over time. The key is to just get started and let the magic of compound interest do its thing. Compound interest is like planting a seed and watching it grow into a tree. One of the easiest ways to make sure you're saving consistently is by automating your savings. Automation takes the guesswork out of saving. Setting up automatic transfers into a high-yield savings account or an investment app like Robinhood, Acorns, or even a simple ETF account is an absolute game changer. These tools make investing accessible and straightforward. Think of it this way. You're already used to living on your current income, right? So why not make saving a part of your routine? So if you set up an automatic transfer to take out, say, $200 per month into an investment account that's yielding, let's just say 8% annually, after 40 years you could have over $1 million. That's the power of consistency and time. And that's just from consistently investing $200 a month. Imagine the possibilities if you start early and stay committed. Imagine if you increase that amount as your income grows. As you earn more, you can save and invest more, accelerating your financial growth. The key here is to make it stupid simple. The simpler your system, the more likely you are to stick with it. You want to set up your savings in such a way that you don't even have to think about it. Automation ensures that your savings plan is foolproof. Automate everything, your rent, your bills, your savings, everything. This way you eliminate the risk of forgetting or procrastinating. This takes away the need for willpower, and your money will just build up over time. By automating your finances, you set yourself up for long-term success without the daily stress of managing money. Look, I'm going to be real with you. Your 9-to-5 job, as much as we all wish it did, might not be enough to give you complete financial freedom, and that's totally okay. It's a reality many of us face, and it's important to acknowledge it. You don't have to be stuck working 60+ hours a week at a job you might not even like. The stress and exhaustion can take a toll on your mental and physical health. There are other ways to make money, and they can be more fulfilling and enjoyable. One of the fastest ways to boost your income is by turning your hobby, or something you're good at, into a profitable side business. And the best part? There are countless ways to make money outside of your main job. The opportunities are virtually endless. If you're good at something like graphic design, writing, or even software development, freelancing is a super flexible and often highly profitable option for young people. You can set your own rates and choose projects that interest you. Websites like Upwork and Fiverr are great places to find freelance gigs. They connect you with clients from all over the world. And if you have a car and some extra time, driving for a rideshare service like Uber or Lyft can be an easy way to make some decent side income. It's a flexible option that allows you to work around your schedule. You make your own hours, and you can drive as much or as little as you want. The freedom to choose your working hours is a huge advantage. Or maybe you're more into selling things online. The e-commerce world is booming, and there's a market for almost anything. Platforms like Etsy or eBay allow you to sell handmade goods or resell items for a profit. You can turn your creativity into cash. There are tons of YouTube videos that show you how to flip things from thrift stores and resell them for a profit. It's a fun and educational way to learn new skills. The key here is to find something that you genuinely enjoy doing. Passion can turn a side hustle into a rewarding experience. This will make it feel less like work and more like a fun way to make extra money. When you love what you do, it doesn't feel like a chore. And trust me, the extra cash adds up quickly. You'll be surprised at how much you can earn in a short amount of time. By dedicating just a few hours each week to your side hustle, you could realistically be making an extra $500 to $1,000 per month. It's a manageable commitment with significant rewards. And over time, this can significantly contribute to your overall wealth. The financial freedom you've been dreaming of is within reach. Become a real estate investor with one simple trick. I know what you're thinking. Real estate investing? Isn't that just for rich people? I used to think that too, but it turns out, you don't need to buy a fancy house or an entire apartment complex to start building wealth through real estate. And no, I'm not talking about becoming a landlord. One of my favorite ways to invest in real estate is through REITs, which stands for Real Estate Investment Trusts. Think of REITs like this. Instead of buying a physical property, you're buying shares of a company that owns commercial real estate, like shopping malls, office buildings, or even apartments. You can start investing in REITs with as little as $50 and they pay out dividends just like stocks. It's a fantastic way to diversify your portfolio and get exposure to the real estate market without all the hassle of actually owning and managing property. Here's an example. Let's say you invest in a commercial real estate REIT that pays a 5% dividend. If you invest just $1,000, you could earn $50 per year without doing anything. And as the value of the REIT goes up, so does your investment. Plus, dividends are a great way to create passive income, which is basically money you earn without actively working for it. It's like having your money work for you, which is the ultimate goal. The stock market, your secret weapon to building wealth. Now let's talk about the stock market. A lot of people think of investing in the stock market as this big, scary thing, but it doesn't have to be. It's often perceived as a complex and risky endeavor, but with the right knowledge and approach, it can be quite manageable. In fact, if you're in your 20s, the stock market is one of the most powerful tools you can use to grow your wealth over time. The earlier you start, the more you can take advantage of the market's long-term growth potential. And the best part is, you don't need a finance degree to get started. With the plethora of resources available online, anyone can learn the basics of investing. One of the easiest and most effective ways to invest in the stock market is through index funds. These funds offer a simple and diversified way to invest without the need for constant monitoring. Index funds are basically like baskets of stocks that track a specific market index, such as the S&P 500, which includes a wide range of industries and sectors, which tracks the 500 largest companies in the US. This diversification helps spread out risk and can lead to more stable returns over time. This means that when you invest in an S&P 500 index fund, you're essentially investing in all of those companies at once. It's like owning a small piece of each of these major corporations. Historically, the S&P 500 has returned an average of around 8% annually over the long term. This consistent performance makes it a reliable option for long-term investors. That's a pretty solid return, especially when you consider that the average savings account interest rate is practically zero. Investing in the stock market can significantly outpace the returns from traditional savings accounts. What makes index funds so great is that they're incredibly low cost and easy to manage. They often have lower fees compared to actively managed funds, which means more of your money stays invested. You don't need to spend hours researching individual stocks or trying to time the market. The simplicity of index funds allows you to invest with confidence and peace of mind. Just set it and forget it. This approach minimizes stress and helps you stay committed to your investment strategy. The key here is to be consistent with your investments. Regular contributions, no matter how small, can add up significantly over time. Remember what we talked about earlier? Automation is key. Automating your investments ensures that you stay on track without having to think about it constantly. Set up automatic contributions to your investment account every month, just like you would with your savings. This disciplined approach can lead to substantial growth over the years. Even if you can only afford to invest a small amount, the compound effect will work its magic over time. Small, regular investments can grow exponentially thanks to the power of compounding. The earlier you start, the more time your money has to grow, and the more you'll benefit from compound interest. Starting young gives you a significant advantage in building wealth over the long term. So there you have it. Those are the exact strategies I use to build my own wealth, and the best part is that they're all things that anyone can do. Building wealth in your 20s doesn't have to be complicated. The key is consistency and having a solid strategy in place. By automating your savings, creating multiple income streams through side hustles, investing in REITs and stocks, and most importantly, starting as early as possible, you'll be well on your way to building a solid foundation for financial freedom. Remember, even if you're making a small income right now, you can still start building wealth. The time to start is now. So what's the first step you're going to take today to start building wealth? Are you going to set up an automatic transfer into a high-yield savings account? Are you going to start exploring some side hustle ideas? Let me know in the comments section down below. And if you're ready for even more wealth-building strategies, make sure you subscribe to the channel and hit that notification bell so you don't miss out on any future videos.